Historically, entrepreneurs have gathered capital from bank loans, individual investors or corporations. But in today's competitive environment, many small firms have faced difficulties collecting this capital in the startup phase. This has led to the arrival of a new way of funding, equity crowdfunding. Equity crowdfunding uses an online platform for gathering investors by offering a stake of equity in the company. This gives geographical spread of potential investors, and since the startup can be founded by many investors, the level of risk is reduced compared to a venture capitalists. A venture capital firm has specialized agents who are evaluating projects with potentially high return. The areas they look at in making decisions of investing is described by the lens model, containing 4 aspects: entrepreneurs' capabilities, product attractiveness, potential returns, and market and competitive conditions. The question is, does the decision-making of crowdfunders follow this structure too? Our service states that 3 of these areas are covered, leaving market and competitive conditions out. However, this aspect might be covered by a phenomenon in decision-making called wisdom of crowds. Theory behind the effect implies that a group's knowledge can be better than the sum of the individuals in the group. The wisdom of the crowd can even exceed the knowledge of an expert. But, for a crowd to be wise, 3 factors are important. The group needs to be socially and educationally diverse. Someone has to gather and make sense of the decisions, and the decision must be independently from each other. This 3rd factor is not fulfilled in equity crowdfunding. The amount of previous investors are visible to everybody and sends a signal to other potential investors. This signal leads to that, if an idea has a lot of investors, others become more prone to invest. Due to this, the individual decision, the 3rd factor, will not be fulfilled. So, if you are an entrepreneur funding your startup through crowdfunding, make sure your campaigns are visible on social networks to attract an initial amount of investors. And if you are thinking about investing in a startup, before making your decision, consider the possibility that you might be biased from knowing the amount of previous investors. Try to evaluate the startup solely from its business potential. A good decision leads to profit for the entrepreneur, you, and the society as a whole, since it creates growth and realization of great ideas.